Andrew Robb, member for Goldstein and the Shadow Minister for Finance, Deregulation and Debt Reduction. Thank you for joining us here at the CIS.
My pleasure.
Deregulation is a topic that we're quite passionate about here at the CIS, and recent estimates of the impact of regulation on businesses put it at 9 to 19% of GDP. Unfortunately, we've got members of the current government who are spruiking passing 590 new laws in this parliament. Why is deregulation important, and what are the coalition priorities for deregulation?
Well, the thing that is really holding back so much investment, killing a lot of confidence, is the firestorm of new regulations. You mentioned 590 odd bills. Well, when you break that down, it represents 22,000 new regulations. Now, these things are starting to choke so much of business activity. So many procedures they've got to deal with, all of which are added costs, right? Making us uncompetitive with against imported product or on export markets. Yeah. So it's quite critical that we, as a community, strip away a lot of these unnecessary regulations. And if we do that, we'll start to restore some competitive capability for the 2.4 million businesses in Australia. Now, the priority for us is that if we do get the privilege of government, for a coalition government, actually the deregulation is perhaps the area that we think we can most reduce costs for businesses and without spending any taxpayers' money, right? And it's an area which is ripe with opportunity. You take the coal industry, for instance. 6 years ago, to get all of the approvals done for a new project, something less than a year. It now takes over 3 years. That delay is costing tens of millions of dollars against a new project and is making us uncompetitive. These are the sorts of things that are being repeated throughout the economy. They're a very high priority for us if we get government to strip these things back and restore some competitive abilities.
Indeed. I want to talk a little bit about debt and deficits now. Our Target 30 initiative highlights some of the burdens that reckless government spending imposes on future generations. We've seen Treasury, the Business Council, Grattan and others have all acknowledged that government spending is unsustainable with our current tax base. If you are fortunate enough to win government at the next election, how are you going to tackle the debt and deficit problem?
Well, you've just got to stop, first and foremost, spending which you can't afford. I mean, the trouble is this government has not lived within its means, right? And there's no silver bullet. It is looking across many, many areas of programs. Even a lot of the deregulation removes a requirement for, large numbers of public servants. Not only does it reduce the cost within a business, it also reduces the cost of government. So we have to look at programs and make a decision. Can we afford those programs? So we either trim programs, scrap programs, but we've got to live within our means. That's a binding principle that we have applied to our policy making and we will apply to government.
And we've seen a lot of people come out and say that the best solution to this problem is just to raise taxes. Do you accept that view?
No, well, the trouble with raising taxes is that you are crowding out the private sector. You invariably, that's money that could have been spent by the private sector investing, either spent by individuals on retail or other things and creating demand in the community, or for businesses. That's money that could have been gone back into new investments, expanding a business, all of that. So life's built around incentives and disincentives. Now, you increase taxes, you increase the disincentive to invest, to spend, to get on with your life. The lower the taxes that we can get, the more likely we are to promote and encourage economic growth. And in the end, that's what will grow the pie. That's what will grow the pie. We're already in a situation where we're living as a community beyond our means, and certainly the government is. The only way is to have more money to cover these expenses. The only way you'll do that is to grow the economy. More taxes will have the reverse effect.
Indeed. And just finally, with the return of Kevin Rudd and the recent reignitings of chaos around austerity and other problems in Europe, we've seen returns of the claim that Keynesian stimulus was what has saved Australia from the GFC. Do you believe that the stimulus package saved Australia during the GFC? And would you support that kind of activist fiscal policy in the event of another global downturn?
No, look, I firmly believe that it's quite a myth that all of that $87 billion saved Australian jobs. What saved Australian jobs is that the Rudd government inherited perhaps the best economy in the developed world. You put on top of that resource prices, the highest in 150 years with China, demand from China. The combination of those two things got us through the global financial crisis. And in many respects, the global financial crisis was a Northern Hemisphere phenomena, which had some effect, of course, in the Southern Hemisphere, but nowhere near the same impact. But we had the unusual situation of wonderful resources. We're blessed with wonderful resources, and a period of time where China was demanding large amounts of those resources. That's the combination of things that got us through the global financial crisis. What all that spending did, which in many cases was delayed, most of it was 2, 3 and 4 years after the GFC, but when that spending occurred, that's what has built up debt to what's heading towards 340 billion. That's what's built up deficits, the 5 worst deficits in our history. That's what's killing confidence and business investment. And in many respects, that spending is the root of our problems now as a community.
Andrew, Robb, thank you very much for joining us at the CIS.
It's a pleasure. Thanks.